So definitely in terms of numbers, when you look at it, revenue grew by 5%, but the EBITDA and the profit is where the miss was. But, the profit also largely down because of, some of the key impacts that we spoke about. So if you move on and show that the higher raw material cost, Forex impact, QCO related instrument impact, so there was multiple that was one of the key concerns in terms of the EBITDA, but all about order inflows today. So the company specifically mentioned that, the Q4 order inflows for this quarter went up by almost 52%, and this has taken the overall order inflow for the year to almost 10,000 crores. Now, the key aspect is that this particular quarter benefited from a lot of large orders that the company won across spaces like data centers, automotive, infra, as well as the railways. They've also highlighted that there have been a very strong development even in the base business, which supports the new inflow of large orders going forward as well. So that is the story for today. Definitely a 9% uptick on a stocks. That's not cheap by any means. So you have to talk about the order inflow as well as the outlook. Now, the company has mentioned that they enter 2026 with a strong demand momentum as well as a very resilient local for manufacturing base. The second point on it is positioned well to benefit from sustained investments in infrastructure as well as railways, and continued capex across segments aligns very strongly with the company's core segments. Now, finally, in terms of a couple of brokerage calls as well, JP Morgan, they maintain a neutral rating, target price of 5639, but highlighted that while the profits were a miss, they will wait for a little more clarity in terms of the order and revenue growth to see the size and the scale of what order inflow could be in the near future. And in terms of Nomura as well, they've actually maintained a neutral rating, but comfortably highlighted that the motions as well as the electrification business helped the company in this particular quarter. But overall, conference call on Monday, a lot more commentary on the order inflow will be something to watch, but definitely the stock of the day in that sense.
Yeah, in fact, we spoke with the management, and data centers market is likely to grow at a compounded annual growth rate of 14 to 15% every year, according to Sanjeev Sharma, the managing director and country head, ABB India, speaking to NDTV Profit earlier today. Listen in.
A few years back, we said data center market is about $1 billion. But now if you talk about the size of that market has grown to $10 billion and expected to grow about 14-15% CAGR every year. So there's a robust growth in this market segment, and it will have multi-year legs to it. As far as we are concerned, there are two main components in data center. One is the computing power, another is the power that supports that computing power. So we participate in providing the assured power to data centers, which runs into very large volumes. And we are reputed globally to be the supplier of choice for large data center builds. And the same pattern is being followed in the country as the data centers being built across the geographies.
I mean, this conversation that I had with the management, they were sounding extremely bullish when it comes to data centers, extremely bullish when it comes to building the order book and execution. The only concerning area that I find over here is in terms of the margin profile, because that has come in at the lower end of the range that they've given, and they're not 100% confident whether they will be able to reach that upper band of the range, but are confident of being within that range. So that should be something that the street should be watching out for. Kunal, with the kind of surge that has come in when it comes to ABB, what would you recommend investors to do at this stage, someone who's holding it? Are your charts saying that this is the time to book profits, or are you seeing further momentum?
Okay, I think definitely there is going to be further momentum. If I look at the long-term charts over here, so what we look at the technical analysis, that as per the Elliott wave, we have completed the fourth wave, and now we are entering into the fifth wave. And that clearly is indicating a new highs for ABB in the long term. So I think if you're holding it from a long-term perspective, the all-time high of 885 to even that could be taken out from a long-term perspective. So if you're holding, continue to hold it. I think even dips, if somebody has not bought it, then wait for dips. I think you will definitely get a dip on the lower end of where the stock has rallied from 4,700 to 6,200 in 1 month. So the rally has been very sharp. But I think a dip is what will be a good entry point around the zone of 5,800, 5,900 would be a good entry point. And from there onwards, you can catch the momentum towards that mark of 7,000, 7,500 for a short-term perspective.